Welcome to my morning report on Friday, the 26th of February, with me, Richard Perry, market analyst at Hantech Markets. The European trading session, decent start, isn't it? We had a big turnaround on Wall Street last night, and that was driven once again by the oil price. What a surprise! Big turnaround on the oil price, big intraday reversal we had in the afternoon. And it was 2% down at one stage, closed almost 3% up, and that completely turned around Wall Street. And what we've seen, I'll show you the chart on the S&P 500. We've seen this breakout now to above that February high, which actually, in technical terms, that completes a pretty decent double bottom. I will certainly be watching out for that, and you see the improving momentum indicators as well. So that's certainly one to watch, and that is very interesting, I think. And we're seeing this move coming in the last few days, and as I said, oil price improving is one big driver of that. So just looking at the treasury markets again, just interesting, slightly picking up today, but yesterday was pretty weak, wasn't it? That doesn't suggest all that massive strength in terms of growth expectations, but fairly much a bit of a consolidation on that 2 year. But certainly I think the oil price moving higher is the big driver of that, and the US dollar in the last couple of days has just started to consolidate, really, and that's interesting because we're seeing that sort of move on across a lot of the forex pairs that I'll talk about in a bit. But in terms of what we're looking at for today, well, we've got a bit of US data this afternoon. Interesting to watch. The growth numbers. Where is it? Growth data this afternoon is expected to come in at zero point 0.4, and that is this chart I've got here is the preliminary reading of last of Q2 of data. So that's 2.1 was the prelim reading last quarter. The actual flash reading, or the advanced GDP for this quarter, was 0.7. So that's actually down. The zero point 0.4 would be down on the 0.7% that we had on the first reading. And I think that the market will, though, be moving on this PCE data. This is the Fed's preferred inflation data. That is due to come out at 1:30 this afternoon. Expected month on month 0.0, which actually, when you drop out that 0.0 that we had in January last year, that actually means that PCE data is not going to move. It's going to stay at 1.4% on the year-on-year data. Now, that is interesting because we had the core CPI data quite strongly higher than expected at 2.2%, but the PCE continues to lag, and that PCE data is the Fed's preferred inflation data. So if that does start to move up, then that will be interesting. The market will certainly react off that. That will be dollar strengthening if that is seen, but the expectation is for no change. Also today we've got the revised Michigan sentiment. That's expected to come in at 91.0, which is just up from the 90.7 that we had as the flash reading. And again, this is the final readings of last month, 92.0. So again, that would be just slightly lower if that comes in at 91.0, lower than last month. You've also got a couple of Fed speakers today, Powell and Brainard speaking this evening, so that could have an impact pushing on to Monday, and also the G20, although is that going to have a great deal of impact? I'm not so sure. So there is a chart of the day that I've got, which is the dollar CAD. Now this is interesting because we've had this this move on dollar CAD. I've just got to change this. This breakdown in this what is a pretty decent symmetrical descending triangle, and you had a breakdown yesterday, and that break below the 36.35 old support, which had been holding for several weeks actually, broke down sharply yesterday, closed down. That confirms the downside break from that triangle, and you actually get a pretty strong downside move from the from that triangle. And it gives you a downside target of around 33.80 from that move, 133.80. So there is some strong downside that could now be seen. And not only that, we've seen the broken uptrend, and that uptrend on the CAD has been in place since May. So a pretty strong breakdown of that uptrend. The bull arguments are beginning to sort of break down on this, and that comes in with this correlation with the oil price. The oil price is pulling higher, and that helps the Canadian dollar strengthening. And we've now seen a breakdown of this descending triangle. Momentum indicators confirm the move. The RSI sort of at a 4-month low. Stochastics also pulling lower. MACD lines kissing, giving a bear kiss and moving lower. So these are all pretty negative moves that you're seeing. And I think what we're seeing is now you'd be looking out for using rallies as a chance to sell. You've got this this old support 36.35 being your sort of basis of new resistance. So if you saw a break, an unwinding technical rally, as these momentum indicators just unwind slightly. The RSI yesterday got to 20 on the hourly, which is pretty stretched. And we're seeing a bit of consolidation in the wake of that, but certainly at the moment I think any technical rally back towards 36.35 would be ideal for a selling opportunity, pull back to that breakdown point, but there is certainly overhead resistance now in place, and I think rallies will be seen as a chance to sell. So I think the interesting thing on the daily chart will be what happens when it reacts to the 34.55 old breakout support as well. That is a key level that you need to watch out for in the coming days. But it certainly looks as though we're going to be breaking lower on this chart, and there is possibility for further downside. So I wish you good luck in your trading today, and I will speak to you later. Thank you.